This meeting is being recorded.
Okay, I think we are on record. So excellent, that's fine. So brilliant. So good morning, everybody. So my name is Tony Tiu, founder here of Renewables in Africa. And as usual, we always bring you those very interesting and amazing conversations that we like to have, right? And the idea is always to look at what are the different issues, challenges that we have in the sector and how can we tackle them, right? So that's what we did. So we have many people that we've interviewed so over the last few years, and today it's not going to be different. I want to bring to you somebody's going to be very, very interesting, and we're just going to have a conversation, right? And I have here a couple of people also attending. They also going to be chipping in and ask any question that they want. So, but why are we here today? So it's very simple. What we know is actually is if we're looking at the current narrative about investment into renewables energy. So globally speaking, we can say it's growing, right? So we have more and more renewable energy projects being built. Clearly not at a fast enough pace for us to completely avert the situation we're into at the moment, but clearly it's growing, right? But when we're looking at the African continent, right, what we actually found out is not a lot of this investment will actually move into this area, whereby despite Africa having the biggest potential, right? Clearly, that's what we could see. Because some reports that came around suggested that we only, over the last 2 decades, the only 2% of global investment that have actually been made into Africa, right? And even within Africa itself, you can look at significant regional disparities. So clearly, one thing that we can all agree is the situation needs to change, and we need to change it, and we need to find new way of investing, right? So that's what we need to do. And today, that's what I want to talk about. I want to talk about alternative source of funding. And one thing that is great is I have here with me one of my colleagues, so Mr. Shingi Samudzi. So Shingi, I think if you are listening to me, would you mind, please? Oh yeah, there you go. I can see you. Excellent. That's brilliant. Yeah, maybe a brief conversation about yourself, and then we're gonna talk. And actually, I'm also gonna introduce here. So my friend from my company who's gonna be. I think he was actually quite keen today to attend this I would say conversation slash podcast or whatever. So yeah, so if you can just briefly introduce yourself, please.
Yeah, great to be here. Thanks for having me on again. It's great to be back. My name is Shingai Sumudzi. I am the CEO and founder of a company called Asoba DeFi that focuses on renewable, specifically solar projects across the SADC region, so the South African Development Community. We focus on small scale utility scale projects, so anywhere from 1 to 15 megawatts, and looking specifically at verticals that include cold storage, hotels, hospitals, textile manufacturing, as well as commercial agriculture.
Okay, excellent. That's brilliant. Excellent, excellent. And like I said, today we want to talk about those alternative source of funding, isn't it? Right? I think there's you and I were having this conversation just before we got online today, and we could see how much we share in common in terms of experience that we've seen over the years. And it was good just to bring that into conversation today and to see how much is going. But before we jump into that, because I think you have many questions. So I don't know, Oluwach, maybe you want to have a quick introduction about yourself, because I think I know you were very keen as well to hear about this topic and ask some questions.
Sure, Tony. Thanks. My name is Oluwach, the Regional Director for Kenya and East Africa at Renewables in Africa. And it's a pleasure being here. Basically, this is an interesting topic, looking at the advancement in terms of solar penetration, and also the coming up of a finance solar solution whereby the off-takers have the opportunity of their projects being financed. So definitely, it will be a great time. Thank you.
Excellent, brilliant. So that's fine. So let me come back to you, Shingai. So basically, before we dive into the conversation today, because we wanted to make it a conversation, right? So it's just a conversation between you and I, because there's many things that we can explore here, and I definitely have a lot of questions. But before we go there, I believe you have a short presentation that you wanted to share. So if that's the case, maybe we can have a look at that, and you can take us through that. So would that be okay?
Yeah, I think that's fine. We can keep it really short.
No problem.
Shall I share my screen, or do you have it up on your screen?
Yeah, if you can share your screen, that's fine. I have it on my screen, but if you can share, that's fine.
Okay. Cool.
Hopefully you should be able to share. Yeah,
I think so.
I can see your screen.
Okay, cool.
Yeah, excellent.
Okay. So I think that there's three things that I want to just talk through really briefly. So in the context of financing of renewable energy and financing of infrastructure in general across Africa, I think there are a lot of statistics or numbers that we can kind of get into or talk about that are important or that illustrate the scale of the challenge that we face right now. So I think the first one that I want to look at is if we look at the types of actors that invest in infrastructure today broadly. So this is electricity infrastructure across the board, whether renewables or more conventional sources. We see that I just want to highlight the 11.7% in private sector and just kind of call this out in particular as important. And I want to contrast this with other areas, for example, the United States, where roughly 85% of all infrastructure is privately owned. I think this is really important because it illustrates and highlights the extent to which private market participation is absolutely essential to ensure that an adequate level of financing and liquidity is actually available to execute these projects. When we see 12% private market participation in Africa, it's particularly problematic because, as we all understand, the governments in Africa broadly do not have the same kind of borrowing capacity or access to finance as governments like the United States or across Europe. So when you have such low participation rate in the private sector in an area where governments themselves are already hamstrung, you can kind of see what the challenge is. And overall, right, the estimated infrastructure needs are anywhere between $700 and $800 billion per year, at least at this point, in terms of addressing all of the projects that would actually need to get done to ensure that the capacity actually meets the demand. And the actual financing available when you total up all of the available sources is $100 billion short. And that's a conservative estimate. Realistically, it's likely much bigger than that in terms of the gap between the financing needs and the financing that's actually available. So to illustrate the impact of that on the actual project execution, we can see that we have about 90% attrition when we look at the projects that are actually in the pipeline versus the projects that actually reach financing close. So it's not just about PPAs that are signed that developers cannot get financed. We're talking about a lack of liquidity that's all the way even to the very first phases of the project when it comes to feasibility assessments themselves, the technical analyses that even is required to determine whether a project is go, no go in the first place. We see an 80% drop off just at that phase. In other words, developers don't even have the money to conduct feasibility assessments or technical assessments or the technical studies that are necessary to actually determine, is this even a financeable project? So we see such huge attrition in that pipeline of available projects in an ecosystem or an environment where there's already a massive infrastructure financing gap. So you can see the scale of the problem is pretty enormous. And this is where I think that Web3 can become a very, very interesting source of capital to actually address that gap, particularly in that feasibility assessment, technical analysis kind of gap. When we look at the countries that raised the most in terms of VC dollars to support crypto projects, you can see that we're starting to see quite a bit of real money that's coming into the space, right? Nigeria, just shy of $50 million. South Africa, just shy of 19 million. Seychelles, likely because of its status as kind of a business hub, similar to Delaware in the United States, $34 million. Kenya, $20 million, right? We see serious and meaningful amounts of capital that are moving into the Web3 ecosystem for projects that are developing infrastructure, for payments processing, for being able to move money around in the first place. But then when, we can start then directing that capital towards actual developers, for example, we can see the potential to actually move things forward very quickly.
Excellent. Whoa, this is actually quite impressive, I have to say. So, Shingi, I think the data that you share with me, and the reason I wanted us to for you to share that before we have the conversation, it's because it actually speaks quite a lot, right? And it's quite impressive. First of all, I think there's just so much that we can unpack on it, right? So I think it's only street slide, but those street slides for me have so much information. That for me is very good to see. So first of all, 12% private sector in Africa. So that on its own, it's ridiculous. I don't know, basically, because I know you have a lot of experience with investors in different areas of Africa. So I guess even though 12%, there must be what, something like 6-7% for South Africa alone, and the rest of the continent. So do you have any idea about that actually?
Yeah, the distribution is not equally distributed. So I would say that there are three primary hotspots: Nigeria being one, Kenya being a second, and South Africa being a third, as sort of the primary gateways of capital. You do see a considerable amount of investment also directed towards both Egypt and Tunisia, particularly from the energy perspective. And I would say that in terms of renewable projects, particularly Tunisia, but also Egypt, have probably the greatest amount of funding when it comes to the mega projects. We're talking about the 100 megawatt plus types of projects. But I think the interesting thing is that we miss a lot when we focus on these mega projects, because not everywhere can even support or sustain, 200 megawatts at a time coming into the grid, right? I think people think about, oh, there's this capacity shortage. I think South Africa, for example, has a 15 gigawatt shortage. And they think, oh, we just need to get a ton of solar all at once and just get as many projects as possible into the pipeline. And it's true that we need capacity fast, but I think the other important aspect of solar that I think people miss is transmission. Is that if you don't have the transmission capacity, if you don't have the infrastructure to actually move electrons from your solar inputs to where they need to be within your system, you don't solve any problems. And in fact, you can, because of the low transmission standards or the aging infrastructure in a lot of places, you can't actually even support a mass of new projects coming in all at once. And so that's the other challenge we face, is that, all right, well, it's not just the inputs. We also need to upgrade the entire grid infrastructure itself. And that's where, okay, well, it's probably easier to get financing for a solar project than it would be to get financing for an entire transmission line network. But, it's kind of a chicken and the egg kind of challenge.
I think what is quite interesting for me here, and I'm saying that because I like people to properly understand the situation we're facing ourselves here. So the thing is, because we only have 12% of private sector, whereby in the United States, it's 80%, right? So that means for the system to work very well, we then need the other partner, the other big major stakeholder, which is or at least the other two I can see here, which is the public sector, and potentially as well the partners, right? The country, the international partners. But the trouble is, in the case of the African continent, those countries, because probably the level of debt, are not able to borrow as much as they want on the market, and also we have interest rate that would literally just cripple the economies. So that means you have a private sector that is not performing. You have a public sector that is not performing. You then left with international partners, and those international partners are nothing but the private arm of countries investing foreign money into those countries. Clearly, obviously, that money is capped, because at the end of the day, that's public money. So that's why we find ourselves with such a dearth of capital. Then I believe I've summarized it well, right? That's what we're saying. The system as it works at the moment, clearly something needs to change. So that's actually quite quite interesting to see. I don't know.
And you mentioned international partners, and I would probably break them into three groups. So
Okay.
you have the Western partners, so represented both through sovereign wealth funds from countries like Norway, but then also through international development aid organizations like the World Bank or IMF. You have Middle East, which is almost entirely sovereign wealth funds. You may have high net worth individuals that have these large conglomerates that they invest through, and then you have, and I guess you throw in Russia to a very, very small extent right now, and then you have China, which is obviously sort of the biggest partner in the room at this stage. The interesting thing, and there are a lot of political dynamics you can kind of get into in terms of like why certain ones right now have larger extent of investment than others. But I think that the most stark factor you can think about is really just like time to funding. So you look at a typical IMF loan for an infrastructure project, right? They require such a level of technical diligence up front that only large scale projects get financing through them. So like the 100 megawatts plus. But it also, for a typical project, like at a minimum, will take 18 months from application to funds dispersed. More often, though, it's 2 years plus from time for initial discussion to funds dispersed. Now, you compare that with the typical project that China will invest in, either through its public-private partnerships, like through private Chinese entities that essentially borrow from the Chinese central bank, or the Chinese government investing directly. That time duration is significantly compressed. So, you get from like 6 to 9 months, and sometimes like it might be out of nowhere. You see this $100 million or $200 million project that gets announced, right? That you heard whispers of 6 months ago. They move fast. And so you can see that you have a funding partner that is willing to move fast and that is willing to throw dollars because it has a large geopolitical stake. Unlike the West, that has a lot of conditions attached to it and a lot of social controls that they try to implement, through first structural adjustment programs and now through this emphasis on democratization and transparency and yada, yada, yada. You can see that China does not have those same kinds of stipulations, and they're willing to deploy capital much faster. And so you see them becoming the preferred partner when it comes to these international sources. So I think when we look at these sources of capital, the duration is something that's really important, as well as the conditionality that's attached to those loans. Now, with what's going on in China right now, I don't know what the next 12 months are going to look like. I suspect that as they deal with their internal issues, like the collapsing of their internal real estate market, unlike doomsayers, I don't think China's going to collapse by any means. I think they are sufficiently independent financially that this is going to be painful, but it'll be like the United States in the global financial crisis in 2008. There'll just need to be some adjustments that they make from a monetary policy and probably fiscal policy, but that likely will constrain the amount of money that they invest in Africa. But I think it's also interesting that you pointed out the debt issues that a lot of African countries face. China is not a bottomless pit of money that they're just going to throw into Africa. Even if they have like the One Belt initiative, they still expect returns. And even though they have collateralized loans and all sorts of deals to protect that credit risk that's very high in Africa, countries like Zimbabwe, for example, are still in arrears with their Chinese partners. And so you're starting to see a reduction in investment as a result of that as well. So, they're running out of room to manage the elephant in the room, which is, we'll say, economic stewardship that's internal with political elites in these African countries. Because I think there's a lot that we can do internally before we start pointing the finger at, well, you need to invest more in Africa.
Oh, okay. That's very interesting. Very interesting. Because actually, what I noted down is in the slide that you shared. So as you talked about China be the biggest partner of Africa in terms of infrastructure project, they finance 25%. They brought 25% of the money. That's significant, actually, when I look at that. Mm-hmm. So that's even more than all the other private sectors. That's right. What you're saying. Double.
Yeah.
That's actually quite okay. It's interesting. At the same time, it's a bit dangerous because obviously, if you only rely on one partner has an issue, which apparently the China is going through some turbulences at the moment right now. Clearly, that's going to be it's going to be affected. Look, yeah, I think what we talked here, it's the current landscape. Clearly, we see it is not enough. But on top of that, even going further, drilling down, so clearly we have an issue with the level of funding that comes to Africa. It's not enough. Like I said, only 2% of the global money will get into Africa. On top of that, now in terms of distribution of that money in project, and you sort of alluded to that, for partners like IFC, because of the complexity of the process and procedures for people to get the money, at the end of the day, it's only the big project, you know, the 50 megawatt, the 100 megawatt that actually get a chance to get funded. So clearly, small projects there are missing, right? So I think that's what you were also pointed out. So, and in the graph that you show, where we had like 90% of the only 10% of a project getting funded. So would you say that those projects in that middle, so those are the ones that are making a good part of the 90% that are not going anywhere?
Yeah, I would say that that's like the majority that don't go anywhere. I would say that the 10%, and I don't have exact numbers on. It's very challenging to get the exact data, but of that 10% that do get funding, the vast majority are mega projects. In part because you look at the profile of the actual developer. These are generally going to be large, very well capitalized organizations that can afford to spend hundreds of thousands of dollars, if not millions of dollars, in the actual development process to do the feasibility assessments, to do the site architecture and all of that, and sort of comply with the very stringent requirements that a lending body like the IMF or even the African Development Bank would require before they actually release funds and actually make the project possible. So when you're a smaller project, you're a smaller project developer, unless you have a lot of cash on hand that you can hemorrhage, especially if you're getting started. That's something that we ran into. Like I had the benefit of, coming from Google and, having sort of that backdrop of just like having worked in the tech industry in the US to be able to self-finance for a while. But if you're a developer that's in Africa, like your access to liquidity in general is dependent on the personal network that you have. So most of these developers don't have the kind of personal network where they can just tap into and raise, even $50,000, right, to be able to then just do site assessments, soil analysis, electricity impact, environmental impact assessments, et cetera. And you also have to consider that in addition to these really necessary technical studies to just determine feasibility, you also have studies and things like that that are mandated by governments as part of the licensing process. Particularly if you're going after government contracts, if you're going after these independent power producer contracts to sell power directly to government, you have to go through all of these hoops. It's actually very expensive to do business development with African governments. When I compare the work that I have to do when working with the US federal government, I used to be a federal contractor way back in the day. It was essentially, you show up to a few meetings. They gave you a very detailed list of the things you need to comply with. You did your own research, you had your own team, whatever, you submitted your application, and they generally awarded bids in an equitable manner, particularly for the smaller projects. Now, bigger projects, I think there's corruption everywhere, but for the smaller projects in the US or Europe, it's fairly meritocratic. Like if you have the best technical proposal, you price it well, you meet all those requirements, you generally have a good shot at winning those kinds of bids. In Africa, that's not true. You can meet all those requirements, you can be the best candidate, the best pricing, whatever. And at the end of the day, you go to sign that letter of intent. That means, okay, now we're ready to actually go spend money on the actual analyses, the technical analyses. And then you'll have some government official that says, okay, can you come in person? I don't want to have this on a Zoom call. And they have a private conversation that they want to have with you about, what you can do for them to ensure that you actually get the letter of intent that you earned on merit of the actual application that you had. And so there are all sorts of barriers, from the assessments that you have to do all the way to government officials trying to claw something out of you at the 11th hour that present these barriers for small projects that just don't have endless amounts of cash to drop on biz dev or technical analysis that just like shake out projects that just don't have cash on hand.
Yeah, excellent. Thanks for that. And I can see that there's some few people that also joining. All just want to say welcome to them. And in fact, today we are recording live a podcast. We just wanted to have a couple of people in the audience, and feel free just to tip in your questions. So we'll appreciate that. Obviously, what we're gonna do, the recording is gonna be shared widely, so for people too. That's why we wanted to keep it a little private for this one, so that we don't too much disturb. But coming back into you, Shinga, what you say, it's so true. I think I can relate that to us because for people who don't know, actually, renewables in Africa, yes, we are this formidable company, so helping businesses to raise awareness about the product and services and getting them to improve sales. Sales is very much important for us to make sure that people can actually deliver the sales, because if you don't do that, you die. But the reason I'm talking about that is because but we also a developer. And in fact, I remember there used to be a time where we were only focusing on development, probably because having an engineering background, you always feel like you want something on the ground, you want to get it done. And I can clearly relate with what you're saying that, so if you don't have some deep pocket, it becomes actually quite difficult. And I can clearly confess that that's one of the reasons when we realized that with my team some time ago, we realized that, okay, we needed to get our business model to evolve. We couldn't just rely simply on development, because development, like I say, it takes such a long time to get project off the ground in the continent, and just so many parameters that can just kill your project that you can't control, that we actually made the decision that it was a little bit too, we were too exposed, only relying on project development. So we had to develop basically another source of income. And fortunately for us, because ever since we started the company, we've always had this imprint on the internet, and we just realized that, okay, there's something we're good at, we're just not exploiting that. That's why we decided now to properly take advantage of our media platform. But I'm just saying that because actually I could clearly relate with what you were saying when you were saying that the most of the companies that don't make up for the 90%. I don't know, because I think there's a couple of people that joined. If you can share as well that slide just for quickly before we move on. I don't want them to miss that part, because it was just the one where we see the amount of projects that would disappear in terms of
that funnel. Okay,
that funnel. That's this one. That's brilliant. In fact, you can even leave the slide there. So that's good. You see, basically in terms of sourcing, brilliant, excellent. In terms of sourcing, we can see 100%. And all the way to prepare and reach financial close, only 10%. And we see 90% people that disappear, that tend to be all those small projects most of the time. So now it's very clearly there's a problem here. Because obviously, let me now move to the next part of the discussion, where we were saying that clearly the current landscape isn't sufficient enough, because there isn't enough money. Private sector is only 12%. So then we have obviously government that can't really borrow money, and international partners, clearly, like I said, they're also constrained. I know China is doing the best, but clearly there's something missing there. We say that even for the people that get funded, there's also an issue in disparity. It's only those big projects that have the chance to get the money. A good part of the project, because they're actually small developers like we used to be, that don't have deep enough pockets. So it's difficult for them to sustain the project for 3-4 years, 5 years without any income, and getting a chance to find an investor. So obviously what will happen, most of them, they would tend to disappear. There's a problem there. But this is actually where it becomes interesting, because you're saying that technology can potentially be a solution to this problem. And we can go to the next slide, which I also liked a lot, where you were talking, because the thing is, obviously, we're going to talk about blockchain here, but most of the time, blockchain only gets associated at time with crypto, and crypto has become something very, very controversial, right? But blockchain is a lot larger than crypto. Although personally, that's just a personal opinion, I don't think crypto is a bad thing. I think that any technology is going through a curve of maturity. So clearly, we're not there yet, and it's still very, very risky. In fact, I can even share a little story that I wanted to do. So I personally came across the world of crypto. That was 2018. I used to have a company I was working with. So there was a client we called KW Coin that was in San Jose, California. and I mentioned that to you, Shingi, if you remember, a few days ago, where I was saying that it was a cryptocurrency based on renewable energy. And the idea was to create a local peer-to-peer market where people can actually exchange renewable energy. So if you imagine you're having a small locality, so where you have a number of customers having solar rooftop, and the idea was, how can you create a local network whereby when you have some excesses of power, you can send it and sell it over to your neighbor, and also by producing renewables energy, you can actually get some credit that you could potentially sell on renewable energy credit market, right? So I'm sure everybody have heard about this kind of scheme or mechanism. So obviously the idea was brilliant on the paper, but we unfortunately never managed to properly get it off the ground. We had testing ground that was in Puerto Rico at the time, because the company being an American company, Puerto Rico being American. So before diving into Africa, they wanted to test the ground close to home, which was Puerto Rico. So clearly it was interesting. And that's how I got introduced to the world of crypto and blockchain, right? So, and since then, obviously, I clearly managed to get a specific interest. Although, as I'll say, we've not been able so far to get the project off the ground to the level where we're happy to widely share that. But I like your graph here, because you're saying that technology can potentially be a solution. I'd like you to develop that a little bit more. But you were also showing that, in fact, there's a few countries already raising a substantial amount of money. But those money, are we saying that they are directed toward energy project, or it could be anything related to crypto? If that's the case, so what is the proportion that will go to an energy project?
So I think right now, the proportion going directly to energy project is extremely small. So most of the dollars that you see raised in this picture are mostly venture capital dollars that are financing crypto-focused or blockchain-focused companies. I would say that the majority of these companies are creating financial infrastructure for decentralized finance projects. And maybe it'll help to define a few terms. So I think when we say Web3, we're referring to generally the internet technology space that's related to blockchain. And cryptocurrencies are sort of one aspect of that, where they're essentially tokens on different blockchains that represent essentially currencies that are stores of value. Decentralized finance refers to an approach to finance where traditionally you have banks that are the gatekeepers where all money goes through. So in order to access financing, to access money, you go to the bank, and a bank would lend money. You may have actors that provide insurance, et cetera. But at the end of the day, banks are the central gatekeepers. Whereas decentralized finance is much more peer-to-peer finance. And you have a distributed network of nodes through which transactions are recorded to this blockchain, the blockchain being the central ledger. So in a traditional finance system, the banks control the ledger. The ledger is essentially where transactions are being recorded. So you have to go to the bank to record a transaction because all the money goes to the bank. In a decentralized system with a blockchain, the blockchain is the ledger. The decentralized system is essentially just like a node of different servers and computers that all are simultaneously getting copies of that ledger for that particular blockchain, and transactions that are happening are then recorded through these different nodes. And these nodes are anywhere. Like anybody can essentially set up a node and contribute to the network and expand the capacity of this blockchain network. So it's kind of like, I mean, it's very much similar to the architecture of the internet itself, right? Where it's not like a central place where all server transactions run through, but it's in fact a distributed web of different computers and servers through which all these transactions are being run. It's just that you have a blockchain that's keeping track of all these things happening as they are, and everybody essentially has a copy of that blockchain, and it's instantaneously being updated so that everybody's copy of the blockchain is being updated. And depending on the technology and how it's developed, that determines how these blockchains get copied and get updated. But essentially, this funding that you see in this graph here, these are all companies that are building various aspects. So for example, there are some companies that are purely cryptocurrencies that are trying to address the currency issues that, that are rife across the entire continent in terms of unstable currencies, providing people with an alternative to their own extant banking systems, which can see your life savings vaporize, although that can also happen with cryptocurrency as well. But beyond that, there are also projects that look at things like, validator nodes. So these are nodes that actually validate transactions. So those are necessary, and so that kind of infrastructure to make sure that the blockchain is actually working efficiently is a large part of where the financing comes, and that makes sense. Like in any network, you build the infrastructure first, and then once the infrastructure is really in place, then you have all these other applications on top of that infrastructure. And I think energy financing, in my case, is just one such thing. So I would not be looking at, for my purposes, building, an entire infrastructure. I'm leveraging an existing blockchain that simply has a presence in Africa, and I'm just adding an application on top of that. But I think just sort of bigger picture, what we're trying to create is what I would call capitalism 3.0, right? Where the foundation of capitalism is a few things. So one is the ability to freely enter in a contract with whomever without constraints, right? You don't have a government saying these are the people that you can do contracts with, or these are the terms on which you can have a contract. Like you're free to engage with whomever you want within the market. And then number two is that you have an actual means of enforcing the contract. So you trust that you will do your part, the person you're working with will do their part, right? There's trust there. And you trust that if one of or either party breaches the contract, that there's some way of enforcing that. And that's where blockchain really shines, is because transactions in the blockchain are based on what are called smart contracts. So in the real world, you have a contract on paper, you need to have lawyers sign the contracts, you file the contract with some agency, or you have some group that you use as sort of the arbitrator if you have a breach of contract. And if there is a breach of contract, then you have to go to that arbitrator, and you have to then go through that legal process of either lawsuits or arbitration, et cetera. All of that happens automatically within seconds on the smart contract, including enforcement of and checking of have you actually fulfilled your terms of the contract in the actual instant that the transaction is happening. So you compress the amount of time, cost, and energy that's required to create a contract or to enforce a contract on the blockchain. So that's where I see that there's incredible opportunity there for solar projects or energy projects or infrastructure projects in Africa, because the ability to then move capital is not dependent on working with the IMF or international partners like either China or Russia or whomever. Like you can literally raise money from anybody in the world that cares about sustainability, that cares about climate change, that cares about solar energy, right? So the pool of capital that's accessible to you, right? There's over $1 trillion right now in terms of total liquidity across all of the different crypto blockchains, $1 trillion, right? If the infrastructure financing gap in Africa is 100 million, and you think about it this way, about $600 billion of that 1 trillion has not moved in the last 12 months. It's just sitting in people's wallets, like undeployed. So you can address Africa's infrastructure gap 6 times over, or you can even finance all of the major infrastructure projects in Africa, or most of them, with just the liquidity in the cryptocurrency space that has not moved or has not been touched at all. So the potential and the capacity to actually move capital is sitting right there, and it's just about creating the awareness and creating the avenues to move that money towards the infrastructure projects.
Excellent. I think that's actually so. What you actually clearly making like a very strong case, right, for us to be thinking about blockchain and crypto for energy project in Africa. You said that there are trillions, of dollars, right, that are here to be tapped. So my question then to you, because actually at the moment we have to say we are on the lead up to COP27. That's going to be in November in Egypt, and a lot of people want to call it the African Cup. I personally don't really know what it means, but let's go with that. And and specifically as well this week, as as we are recording this, because like I said, that's a live recording of the podcast. We know that we have the Africa Climate Week in Gabon and Libreville. So, what does it take for this kind of solution to be discussed at those stages, basically? And or maybe another way to ask the questions: why, if there is so much money to be tapped into there, why don't we look at that seriously yet in Africa, for example? Are we too dependent on our, let's say, previous partner who's sort of imposing us some rules and regulations to follow for us not to look at that? Because we've seen, for example, Central Africa, they decided to adopt Bitcoin as a legal tender. Has been all of an issue. I don't want to dive into that. I'm sure we need a proper other conversation to look at that. But I'm just saying, here is somebody struggling to get the investment he needs, right? Clearly, can't rely on the local currency because it is as volatile as any crypto. Wanting to explore another route, but obviously everybody's jumping at him. So what does it take to have a serious conversation looking at the opportunity as well as the challenges of crypto and blockchain at those stages?
I mean, part of me says, I almost don't care if blockchain is even a topic of issue at COP27, because I think that the longer these established channels of politics ignore, that creates greater opportunity for people like me to actually sort of move under the radar and be able to raise money and actually deploy capital and get to a point where when we do get under the eye and do become a serious topic of conversation, we're already developed enough that the rug doesn't get pulled from underneath us in terms of being able to actually deploy the capital the way we want to. So that's one part of the coin for me. I think the other part is to truly answer your question or to address sort of what you're getting at. I think there are a couple parts. So one is it's a technical leap, right? It's still a very new technology. I mean, Bitcoin is like 15 years old or so as a currency. That's very new. And really in terms of mainstream awareness, maybe 8 or so years. In terms of like real retail dollars getting in there, I think like still a majority of the dollars that are in the crypto space came in the space in the last like 4 years, right? So you can just see that it's still very, very new, and as much as it gets media attention, the overall global adoption of crypto, I mean, it's only like 16% of Americans that have any kind of involvement in the cryptocurrency market, right? And I would say that the overwhelming majority of cryptocurrency participants or wallet holders are American. So it's still very much concentrated in a very small number of people. So I think that's part of the issue when it comes to African leaders looking at cryptocurrency and saying like, let's adopt this. I mean, just very briefly talking about Central African Republic, it's like something like 90% of the population are unbanked. So, adopting Bitcoin as the legal tender was probably more to do with displacing the franc, or like the sort of that the French-backed currency that's common across West Africa, as it was to actually any kind of economic empowerment to the people there. And so I think that part of the resistance you'll see, and this is the second part of the resistance you'll probably see to folks at venues like COP to actually talking about this, is that it represents fundamentally a challenge to the financial status quo and a challenge to the current gatekeepers in terms of who actually controls the flow of finance into and out of Africa. Because essentially what this would allow us to do is almost completely bypass. If even 20% of the total market cap of all cryptocurrencies was aggressively deployed in Africa, you would essentially completely bypass the IMF as like as a meaningful tool, a geopolitical tool that the United States and Europe can use to create leverage over the political and economic situation in Africa, right? You completely dismantle the neo-colonial relationships when you allow for that level of capital, and a lot of it is anonymously deployed, right? To be able to be deployed in infrastructure projects, similar to how China is being viewed as a threat right now, where there's so much concern about what China is doing, even though China is doing the same colonial deal that that the U.S. and Europe is doing, but then plus some, because they're actually creating infrastructure for daily use and not just for extracting resources. So I think that's a dimension of the conversation that I don't think that a lot of the Western COP participants are really ready to have broadly, because it represents a challenge to the power behind those that are actually representing those countries at COP. But I think that it's still a valuable conversation to have. I just think that the people that are going to be driving that conversation are not going to be established, 60, 70-year-old statesmen and women that grew up during the Cold War and have a certain view of how finance happens in Africa.
Excellent. I think I didn't realize, but the time just flew by, right? We only have a couple of minutes left, but I definitely can see in the picture that you're sharing here. So in Cameroon, which is obviously the country where I originally come from. So I'm sure the 2 million there, because I know personally a lady, or at least not me, my wife knows a lady who actually raised $2 million. That was for a platform she created for Africans to be able to transact more into Bitcoin. I think she definitely, I was aware of that. So I suspect she's actually part of the start here, but it's actually quite interesting. But just to wrap up here, I definitely want you to have a final word and just see for people that may be listening, interested, how can they get in touch with you? Shingi, and what can you do for them? I want you to let us know that. But quick question. So for your company, I saw about that. I know it's doing quite well. So you may want to give us a very quick update to what's happening on your side. I think you have very interesting activity at the moment. Have you then personally raised money through blockchain and crypto?
Yeah, actually, we're about to do our first raise through Web3. So we got investment from a blockchain platform called Flow to actually develop an NFT marketplace. And one of the interesting things that we're doing, because I know that NFTs, people think of NFTs as sort of like JPEGs and just sort of like weird art, right? But I think that the next wave of what NFTs are going to do is something called tokenization. So it's essentially taking a real world asset, and similar to what you do with with a stock in a company, right? Is that you would essentially use NFTs as representations of that underlying asset. So let's say that you want to fundraise for a solar project. Now, in the future, what we are aiming to do is essentially sell NFTs that would then essentially be equity for the project. And so if you hold the NFT, you would then get a percentage of the cash flows from the project once the project goes live. It's, again, you tokenize that NFT and it becomes an actual financial instrument or security, just like a stock, et cetera. Right now, what we're doing, this is a first step though, is we are selling NFTs. These NFTs, we will deliver rewards based on the carbon dioxide emissions that we offset through our projects. So people will buy a $100 NFT, for example, and over the course of the year, they may get $20 back in rewards for carbon dioxide emissions that we reduce through the projects that we have. And that's sort of just like a first phase of really just like targeting people that are really interested in specifically addressing emission reductions in African countries. And then as we go through the regulatory process in the United States, because we need to register as a security to be able to do the next phase, which is deploy capital as equity in projects to be able to then deliver returns, like actual investment returns to people that hold the NFTs. But that's kind of what we're working on right now. This first phase of just carbon offsets will be launched in September 21st. And then we're targeting December, hopefully a launch on Christmas for the actual investment grade NFTs.
Excellent. Wow, that's actually quite interesting. Okay. People can definitely see you definitely believe into what you're preaching here. So what is the best way for people to get in touch with you here? So if they want to say, hey, I've heard what you had to say, Shinge. That's very interesting. I'm still a little bit sitting on the fence, but I'm actually curious because you told me you have trillions to be invested, and it looks like your company, you've already gone down this route and you know what you're doing. So how can people get in touch with you if they want to continue the conversation?
Yeah, a couple of spots. So we're on Twitter. So we are Asoba DeFi on Twitter, and we can, I think in the video or the podcast description, we can drop the links. But we are Asoba DeFi on Twitter. You can find me personally on LinkedIn. I'm LinkedIn/in/Shingai. You can find me and drop me a note there. You can go to our website, which is asoba.finance. And there you can capture all of our links. And for those young and tech savvy among you, or just the tech savvy, don't have to be young, we will be launching our Discord page on September 6th. And so Discord is going to be the hub where we share all of the updates on the projects that we're working on. We'll have, for those that invest in our NFT launch, we'll actually have details for every single project where the funds are actually being deployed. So you can get a really clear sense and be, in the name of complete transparency, you'll be able to see, the project step by step of all the projects we're currently working on, the status of construction, at what point we're actually going to be going live with the projects, et cetera.
Excellent. That's fine. I think we can definitely stop sharing here. But first of all, I just wanted to thank you again for the time that you've taken. I know it's very early for you. I think 6:30. So because I know you're in California at the moment, but I definitely wanted to bring you on. I think the last time we had a conversation, it was a bit later in the day, but I wanted to make sure that we do that early. But the thing is that people that have missed the conversation, they should be okay, because what we're going to do is simply just going to be recorded. We are recording it, obviously, but making it available on our platform in the next couple of hours for people to be able to see a good part of this interview. But clearly, actually, that was a pleasure. I know people that are listening, so we wanted to do something special here, have a live recording of our podcast, and then we wanted to have Shinge. I know you haven't had a chance to ask your question yet, but one thing I can say, definitely when you see us posting the video live, just drop it in the comment, or maybe reach out to us, Renewables in Africa, all the question. We make sure that they are relayed to Shingai. And then also, I think he sent the details of how to get in touch with him. If you also missed that, you all know me, or why you will not be connected. So reach out to me, and we can make it sorted. So that's all I had to say for today, because I think we just end of our time. But I just wanted to thank everybody for attending. And like I say, so I'm just going to be making that available for people that miss it. And hopefully you have enjoyed this special experience that we brought to you. So having a live recording of something special that we are developing. Last but not the least, we are about to launch a new show on Friday, which is going to be about renewables and money. So what is it going to be about? Only talking about the business of running a renewable energy business, right? Because a lot of people running business in the sector don't know how to make money. And I say that because I used to be one of them, right? And I thought, if we want to make the industry grow, we also need to teach is the big word. Let's say we also need to talk about how can we help any people in the sector make money? How do you make sense by doing a business into renewable energy? I talked to you about my experience being a developer, finding that was a little bit short as an experience. We had to look at any other business model, and that's how we have evolved in what we have right now. So that's the whole point of the show that we're going to be launching, talking about renewables and money. How do you make money with renewable? So thank you very much for listening to that. Hope it was interesting to you. Feel free to drop us the feedback and emails, and I appreciate that. Chingy, pleasure. And I know you still have a long day ahead of you.
Yeah. Thanks for having me. It's always good to talk to you, Tony.
Okay. Thank you very much, everybody. And a pleasure. Thank you.